Welcome back. In this lecture, we will analyze trade as a percentage of GDP for two major economies, India and China. Trade percentage of GDP is a measure of how much a country economy is dependent on international trade. Formula equal to export plus import divided by GDP into 100. Higher percentage equal to more open economy, strong global integration. Lower percentage, more domestic focused economy. Here's the Spark SQL query. Select value comma year comma country code from indicator where indicator code equal to any.trd.gnfs.sz and country code in IND, CHN, order by year. This query fetches trade percent of GDP for India and China across all years available. From the query, we can compare India versus China in terms of openness. See how China reform post 1980 increased trade dramatically. Observe India gradually liberalized after 1991, identified trends where both countries became more integrated into the global economics. Why it matters? Trade is a driver of economic growth. Higher trade share equal to great dependency on global market. Help policy maker balance export, import and GDP growth. Useful for analysts to build country comparison dashboard. To summarize, we analyze trade as percentage of GDP for India and China. The query allows us to see long-term trends. Insight reveals how trade shape the growth strategy of both nations. So now let's move to the practical demonstration of it. So let's get started. So here is the trade as percentage of GDP for China and India. SQL query, select values, year, country code from indicators where indicator code equal to any.trd.gnfs.zs and country code in China and India. So that's why we have written IND and CHN. Order by years. So here is the value, year and country code. So we have mapped it in a line chart. So here you can see we are going to see the indicators for China and India. So settings, we have years as key, group by country code and values over here. So how we do it? By dragging this country code into groups, year into keys and value of sum into values. So this is how we get the line chart. So that's all for this lecture. See you in the next video.